What's up everyone, Dylan here. I wanted to hop on for another episode of the weekly analysis video. With that said, we'll hop right into it. So the S&P has been very resilient, and the recent rally that we've seen was very impressive and will go down in history. The reason I say that is because the S&P managed to close 9 consecutive green days. The last time that occurred was over 20 years ago, back in November of 2004. Today was the first day in the last basically 2 weeks that closed red. If today also closed green, it would have advanced for 10 sessions in a row, which the last time that happened was September of 1995. So again, very rare. We have not seen 9 consecutive green days since 2004. So again, very impressive action from the bulls. So where does that take us? That brings us right back to where we were on Liberation Day, which was April 2nd. Okay, Liberation Day was the day that Trump came out and took out a freaking billboard and announced the reciprocal tariffs. And from that day on, the next 3 days after that, from the close of April 2nd, proceeded to drop over 15%, right? Basically, the market crashed from that general area. So I have been using that Liberation Day candle as somewhat of a supply zone because it represented basically a basing candle followed by a very aggressive drop to the downside. So supply is another form of a resistance area. So the last couple videos I have told you guys that I was interested in shorting the test into the 50-day moving average, and I am a man of my word, and that's exactly what I did. So essentially, right, and it wasn't just the 50-day moving average, it was the fact that the 50-day moving average test was the first retest at that 50-day moving average since the deadly cross. We had the Liberation Day supply. We had an anchored VWAP. There was like 7 different pieces of context backing up the reasoning as to why I thought that general area would produce a sell-off, and as a result, put money behind that trade idea. So let's go down to like a 15-minute chart, and I started shorting late Wednesday. Right, Wednesday evening after the close during extended hours, where the S&P hit an anchored VWAP from the year-to-date high, and then I continued to scale into the short as Thursday's session progressed. Basically, I was able to accumulate as the market was heading to the upside, right? And that was my plan. I followed my plan that I set out well in advance, right? And fast forward, I went over this, I reviewed it in the Discord, I gave my thesis, I gave different areas of, where I scaled into, but for the sake of this video, because it's an analysis video of the next week, I wanted to just make it very quick. I ended up scaling out of my first target at 5601. And before you guys say, oh, that was the low, there's no way you scaled out of the low, I just want to show you guys some receipts, right? On Thursday at 6:08 p.m., right? I said scaled out of the first chunk at 5601, right? Stop loss moves down, blah, blah, blah. So 6:08 p.m. on Thursday, right? We go to a 1-minute chart. Let me get rid of this 50-day moving average, right? 1-minute chart, right? Again, 6:08 p.m. I posted that I scaled out of the first chunk, right? Let me go ahead and do one of these vertical lines, right? 6:07 p.m. is when you look at the low up here, right, where it says L. You'll see 5601 was the low. The very next minute later is when I posted in the Discord. So clearly, again, I have my receipts. So before you go out and say, oh, there's no way this person bottom ticked, I did. And obviously, did I think that was going to be the bottom tick? Of course not. I was expecting this trade to hit multiple targets. So by no means was it necessarily a good trade, a great trade. I followed my predetermined plan, and I controlled what I was able to control. So Clearly, that did not work out as I expected it to. But going forward, I want to show you guys the difference between, or the similarities between what we're seeing now and 2022. And in doing so, I'm going to use the Nasdaq Cash Index. Okay, so let's see. Let's see what Dylan is talking about. So going back to 2022 is the last time we saw a deadly cross. Okay. I want to go ahead and point out when the deadly cross occurred back in 2022. It was right around, call it March 1st of 2022. Since that occurred, right, once the deadly cross occurred, the Nasdaq basically rolled over and made a lower low. But ever since that occurred, that did not mean and did not trigger a move that went solely down. Instead, what did the market do? The market managed to rally. I believe it was 18%. Yep. So 17.2% from the lows that it made on March 14th to the highs that it made 2 weeks later. Okay. So it managed to rally 17% up to the 200-day moving average, where it got a little bit above there and then rolled back over to come off for the next several months. What is that? From March down to, call it, October. So for the next several months after it topped out of that 200-day moving average, that marked a very, very key inflection point. So 17% from lows up to the 200-day moving average. Very similar to what we are seeing now, okay? So deadly cross occurred. When did it occur? It occurred right around April 11th. What happened? The market came off from that deadly cross into a low, which what happened? It rallied for, just about 15% up to the 200-day moving average. And you could see the high of Friday was 20,176.6. And if I really zoom in here, you could see it basically touched that 200-day moving average perfectly. So am I saying that is the top, similar to what happened in 2022? It could be, okay? And full transparency, I am not positioned for it at this moment, okay? What I would be positioned for is this. This is what I'm hoping occurs in the upcoming week, maybe 2 weeks, right? This is what I'm hoping for. And obviously you should never hope, but all I'm saying is if this scenario occurs, I will put risk back on the table to get short again, okay? This is the area that I will be looking at going forward. The high of liberation on US 500 or SPX, basically the same thing. It's the cash index for the S&P 500. The high of liberation day, which was April 2nd, basically lines up with the 200-day moving average on the S&P cash. Now, Dylan, you just showed us the Nasdaq. Why are you looking at the S&P? In my opinion, the S&P sets up for a better risk-reward opportunity. So that is why I want to use the S&P 500 over the Nasdaq if I can. Okay? So if this general area gets tested, where it tests the April 2nd high and the 200-day moving average on the cash index for the S&P 500, that is where I will start to scale into another short. Because clearly, when I got into the short last week, that only hit one target, I mistimed it. So yes, the trade that I took last week, the short that I took, did end up in a small win, but it did not do what I expected it to do, aka sell off more, hit multiple targets, and really give me that downside continuation that I was looking for. So this will be the new area that I am looking to position myself for a potential downturn in the market. Okay, I want to make that very clear. And it would be very similar to what occurred back in 2022, as I noted. So very close similarities where after the 200-day moving average, the 50-day moving average crossed down below the 200-day, right, the deadly cross, the Nasdaq managed to rally up and then hit that 200-day moving average, got a little bit above there, and then came off hard. So I'm looking for a very, very similar pattern to occur this time around. Okay, why do I think the market is going to sell off? Okay, a lot of people can argue that, oh, Dylan, we just saw 9 consecutive green days in a row, right? A rally that proved that the bulls are resilient and very, very strong, right? Something that hasn't happened in over 20 years with 9 consecutive days, right? Clearly, they are very, very strong and present in the market, right? And when I say that, I'm talking about the bulls, okay? So this is my argument, right? Technicals, right? Similar to what happened in 2022, right? History tends to repeat itself when it comes to those types of patterns where an extreme move to the upside, which we have seen over the last 2-3 weeks, comes into an area of resistance and it becomes very, very exhausted into that area of resistance. A lot of people get complacent where they chase longs after a lot of the move has occurred, so it doesn't take much to flip that sentiment where complacent longs turn into panic sellers, okay? I wanted to quote Adam Crisafulli and Tom Essay. These are 2 names that I normally quote in other videos, so let's get into it. This is from Adam. He said, the Q1 earnings season has been a bright spot versus subdued expectations back in April. But there is still enormous uncertainty on the outlook. And herein lies a key risk as the narrative is growing increasingly complacent on tariffs, with many people assuming the worst is in the past, when in fact the effects of Trump's trade war haven't been fully felt. Tariffs will work their way through the economy over the course of months, and the process is really only just getting underway now. And then this is Tom Essay, right? Q1 earnings season, which is what we're seeing now, right, was better than feared. But it's important to note that this quarter of earnings closed on March 31st, which was before Liberation Day, right? Before those reciprocal tariffs were even announced. Tariffs are a real headwind on earnings. We don't know how much of one yet, but we'll have an idea in early July as the second quarter will occur entirely post-Liberation Day tariff increases. Risk to 2025 S&P 500 earnings is one direction, down. It's just a question of how much they get cut, and the lower earnings estimates go, the more of a valuation problem this market will have. So the earnings season has given the S&P and the Nasdaq a nice boost, right? We've seen some of the mega cap names come out with earnings that were better than feared, right? You look at the mega cap names and you'll see that a lot of them had really, really solid earnings or better than feared earnings. But again, this was the earnings season before, right? These earnings were from the time before Liberation Day. So up until early July is when we'll really potentially start to see the effects that these tariffs have brought upon these companies and the revenues and stuff like that. So again, Microsoft, right? Tesla has been rallying. Meta has been rallying, right? So we've been seeing these mega cap names ultimately give support to the overall market because of the better than feared earnings that we have been seeing. So that has been a very, very large component of the recent rally that we have seen in the overall market. Okay, so we, in my opinion, and clearly Adams and Tom's, based on what I just said, many people are assuming that the worst is in the past, but in fact, again, the effects of Trump's trade war have not been fully felt, and in fact, the process is really only just getting underway now. So I want to make that very, very clear. And again, the technical aspect too, similar to what we saw in 2022, is going to be very, very important as well. Now, and what I'm looking for is a continuation to the upside, because again, ideally, I would like to see the S&P, the cash S&P, go up an additional, call it 72, 75 handles, and beyond, right? Because the 200-day moving average is a little bit beyond that Liberation Day high as well. So I am rooting for a little bit more of a rally to the upside before I expect that downturn to begin. Will I get it? Who knows, right? Because again, the Nasdaq, the cash Nasdaq, already hit the 200-day moving average as of Friday. Okay, so that could have been the high. I really don't know. But again, full transparency, I am not positioned for a total collapse as of this moment. I already tried Wednesday, Thursday, and already got stopped out of the remaining position. But again, we will see going forward. Now, if the market continues to stay resilient, this is a setup that I'm looking up at taking on Tesla, and I talked about it, I believe, last week's video as well. But if Tesla breaks above, call it 292, 293, whatever floats your boat, but this general area where it has clearly failed at 4 different times, 4 different days, if this thing really, really gets some momentum and traction to the upside and breaks above that 292 area, I would be interested in taking calls targeting 300 plus, okay? And ideally, I would only be interested in doing so if the S&P and the Nasdaq hold up quite well going into that breakout, okay? If the S&P and the Nasdaq are crapping out and really, really gaining traction to the downside when that Tesla breakout occurs, then I wouldn't be as willing to participate in that breakout. So contingent on S&P and the Nasdaq holding up. If that Tesla breakout occurs above 292, 293, I will be interested in taking that as well. Okay. In terms of economic events, we have the Fed event on Wednesday. That will be very, very, very important. That has the ability to influence overall market sentiment. So definitely keep an eye on that at 2 p.m. Eastern time on Wednesday. To the downside, it has not changed from the last video. I think I talked about it in the last couple videos, but this area or this trend line on the Nasdaq remains very, very important for any downside continuation that we may see going forward. And you could see that it's still a ways away from that, right? It's close to 1,000 handles away at the time of me talking about this, but that will be a key area going forward if tested. And clearly, this trend line is an ascending line. What does that mean? That means that as time progresses, that line goes higher and higher and higher. So, depending on if and when that trend line gets tested, that line will change, as time goes on. So definitely I recommend drawing it on your chart so that you don't have to rely on me to update going forward. So draw it on your line so you could track it day by day, hour by hour, so on and so forth. But ideally, the bulls, if tested, the bulls want to definitely defend that general trend line. And if they're unable to defend there, something that looks like this, where it breaks below, you would then want to look at that area to see if it acts as resistance on the retest. Okay, so definitely keep an eye on that trend line, as it has proven to act as key support on 4 different tests. So that is that going forward. Like I said, to the upside, I'm looking at the cash index high of Liberation Day into the 200-day moving average on that S&P. And then to the downside, you have that trend line. You also have the gap fill on the Nasdaq and the S&P. So these are some of the macro areas that I will be looking at going forward. And I will talk to you guys soon. Peace.